with our two panelists this evening. Saniel, let's start with you. How do you see India?
Right, thanks, Jeanette. So, just from a broader sense, right, there are three reasons why we like India, and I think it's very uniquely positioned, within the global markets. Number one, there is a strong internal market, so there's domestic demand. There is a demographic dividend. I think the previous panelist did mention about the young population. And then the third is a structural shift in policy from the government, which is infrastructure push, manufacturing in India, make in India. So these are the 3 or 4 factors. And if I want to leave one number, India's GDP is close to about $4 trillion, 3.54. Nominal growth is right now 8 to 10%. So you expect India GDP to double by 2032, 2033. That's 4 trillion incremental economic size. 60% of that is consumption. So there is a $2.6 trillion of consumption demand in the next few years coming from India.
Gurmeet, coming to you. Yes, India is certainly growing. It's certainly a very exciting market in terms of the potential. But one argument that can be fairly made about India is that it's difficult to price risk in India. As we made the argument earlier as well, it's an unproven market. The opportunities are plenty, but the realities of doing business on the ground are complicated. You have boots on the ground. Your firm operates there. Complete circle makes wealth there. What should a foreign investor know about India before really stepping in?
No, that's a good one. So I think the data is good, but the real picture is even more beautiful. If you see Nifty 50, which is our index, 10 years back, the profit pool was $25 billion. This year, ending FY25, it's $100 billion. So the benchmark return in INR is 14%. So you don't need any of us to make 14% in India. That's been the return for the last 30, 40 years. In dollar terms, that's coming to around 11%. So gradually post-COVID, institutional capital is now getting more and more comfortable. It's largely led by the earnings growth, which is almost in line with this number, which is 14, 15%. Just see the exit. India market was never that deep. FPIs in last 2.5 years have exited a little over $30 billion. In fact, we see big quantum exits of billions of dollars happening in a single trading session. KKR exiting, Ask Wealth Management firm. We saw a bank getting exited and bought by the Japanese firm. So billion-dollar deals are happening now, over the counter. So that liquidity, the exit part, I think is something which has materially changed post-COVID. We have had 20 crore new demat custody accounts opened in COVID. So 50 million clients came from independence till COVID. 4x of that came post-COVID. So I think this is a resurgence happening, especially in tier 2, tier 3 towns. So some of the change is underway. You can see that in defense, in electronics, a bit of that in semiconductors. Some of the change is where you now need to focus on, which you can be early.
Gurmeet, I want to come back to you with the tier 2, tier 3 city idea. But first, I want to go to Saniel, because Gurmeet spoke about these sectors. And certainly, we are seeing India as a stock picker's market. You certainly have to see the growth and make a conviction trade in a lot of places. And those who have done so have really made a lot of money. Where are you telling your clients to invest in India? Where are your conviction picks within India? And why, of course?
Right. So, I was discussing about theme. Let me elaborate that. India's population, average per capita is about $2,500. 2023, there were about 40 million people in India earning more than $10,000. By 2030, this will become 100 million. So more than doubling. And I don't need to tell you that. Above $10,000, your discretionary spending wallet share goes up materially, whether it is autos, whether it is capital goods, whether it is traveling. That's one theme. The other one is hospitalizations or hospital sector. As again, your income level goes up, you want preventive medicine, preventive diagnostics, as well as a higher quality healthcare space. We are seeing all new businesses coming in this space. The other one is, I said about financial inclusion and digitization. So, in the last about 10, 12 years, 99% of India's population now has its own 12-digit biometric ID. That helps in financial inclusion. So, again, in the last few years, 500 million new bank accounts were opened, which means these people were never banked and now they are in the banking system. And the last part, I was referring to the infrastructure push. So India has committed to about $1.3 trillion capex, which has started a few years back, will finish in 2027. There's a big thrust. This is in energy, defense, road, railway. This definitely creates jobs and creates and removes long-term bottleneck within the space. For another example is railway in India is spending about $137 billion capex in the next 5 years. And what this means is the capacity will increase by 200%, almost doubling of the capacity. This definitely benefits manufacturing because logistics is a key bottleneck. So these are the few areas that we are looking at it. Within space, we tend to look at either sector disruptors or industry leaders. That's where I think you have an edge. This is how we look at it. Yeah.
Gurmeet, same question to you. What are you really telling your clients? Where are the spots within India to make money?
See, one good thing about a market is that if you get one macro theme right, there is plenty of wealth to be made. So in 90s, if you got IT right, internet right, it did not matter whether you bought Infosys or TCS or HCL. Everybody became 100 baggers. And every country goes through a cycle. So I think we are now going through this manufacturing reemergence. Now, if you look at, for example, Korea, from 80 to 86, their share of manufacturing went up from 20 to 27%. It happened to Indonesia from 86 to 96. It happened to Vietnam from 2010 to 22. India's manufacturing to GDP was 11% in 2013. We are at about 15%. And there is an official goal of 25% manufacturing to GDP ratio by 2030, which means the current market cap of manufacturing is $500 billion. So the economy will grow from 4 to 10 trillion in next 10 years. The manufacturing will grow from 500 billion to 2.5 trillion. So there's a 5x opportunity in manufacturing. And then you can break it down into defense, auto, electronics. To give you an example, electronics, 15% of the iPhone now are made in India. It will be 25% in next 2 years. Dixon is now almost making 60% of the display panels of the world. So we are moving up the value chain on electronics. The second big opportunity, which Salil also mentioned, is the financialization of savings. So we have more investors joining from tier 2, tier 3 towns. In fact, 50% of the new investors are coming from tier 2, tier 3 town. Look at this way, FIs have sold 1/3 of their holdings. They owned 23% Indian stock market. They're down to 16% in last 9 years. The market is just 4% away from its all-time high. No, I have not seen that in my 22 years where FIs are, if somebody would have told me 3 years back that FIs will sell $30 billion, I would have probably taken put options and, been on cash. So I think that's the second big change. And the third one, most importantly, is this rising entrepreneurship. India's startup ecosystem is thriving. We say Bangalore is the hub, is the Silicon Valley. You will be surprised, the startup hub for last year was Lucknow. Each state is now developing, startup. And the driver for US or China or any large market is the innovation ecosystem. And I think to me that is a subtle change, which is still not getting captured in the market.
Gurmeet, for businesses across, I'm hearing this theme across that the growth is coming from the tier 2, 3 cities. And unlike many other countries in the world, in India, most tier 2, 3 cities speak completely different languages, quite literally completely different languages. Yeah. It's unlike the US, it's unlike China, it's unlike most other places. It's more fragmented. It's multiple countries within one country.
Yeah.
How can you tap that kind of growth when you literally don't even speak the language they do?
See, one good thing about, and I think that's the case with Hong Kong and China too. I had a lot of difficulty in telling my cab driver in the morning where to come from the station. But one thing with India is the English-speaking population. I'll give you a figure. 20% of the global chip designers, engineers, work in India for MNCs. Most of the GCC work now is getting outsourced to India. So one is, we are very focused on the FTAs which India will sign with UK, US. There is a second order impact. So for example, with UAE, we have a great equation. We have a GCC pact. So all the work which UAE will get because of the UAE-US deal will get outsourced to India because of the equation. Same thing with Japan. So while the headline would be FTA with US, UK, the second order beneficiary, so we are the back office, we are now the GCC, And now we are gradually become the manufacturing. I think the one challenge and one opportunity is rise in this English-speaking population. And I think that's where these tier 2 towns with Indore, Lucknow, the different state capitals. One thing the government has also done, Jeanette, is there are individual GDP targets. So I tell my clients, don't look at India as a part of EM. Look at India as core allocation. And then different Indias, within India. For example, Maharashtra, which is the largest state, has a 1 trillion GDP number by 2030. Uttar Pradesh has a 1 trillion GDP number. I'm talking of Indian states now, talking of $1 trillion GDP, which is more than some of the EU members.
Very, very rightly, there was mention of rule of law, there was mention of contract enforcement. India very notoriously lacks in some of these areas. And we are very upfront with that. There are certain areas that foreign investors have to adjust for, have to factor in when they come into India. So Saniel, what are these factors that you adjust in when you bring your foreign money into India?
So from a regulation standpoint, I think we have all the requisite licenses. So generally, it's a dollar fund outside. But I think if you are referring to from a business standpoint as well, I think one big risk as an investing side we see is, can India really grow at 8% real GDP growth, right? Versus today about 8 to 10% nominal, deflator, you are at 6.5%. India spends about 7% of its GDP as broader capex. To grow higher, you really need to spend on infrastructure and capex. As an example, for 20 years, China spent 10% of its GDP on capex for 20 years. So I think that's a key challenge. We need serious structural reforms, land reform, labor reform. Last part is creating jobs. So, based on broader statistics of younger population coming into workforce as well as agricultural shift, India needs about 8 to 10 million jobs per annum. And I think this both is a challenge as well as a benefit. As manufacturing picks up, you see all these jobs getting absorbed. Yeah.
What I can see the timer going red on the clock. So, what is the key kind of questions that your clients ask you, Saniel, about India?
From a medium-term perspective, so very broadly, if you're looking from outside, it's always been a hope story. Why now? Right? That's, I think, a very key question for us. Why now? So our view is, one, it's at a cusp of consumption, from 3.54 trillion moving to 8 trillion in the next 10 years. This journey is very different. You need to do basic necessities, basic infrastructure investment, all the basic things. We believe now that is moving up. 100 million people, more than $10,000 is a very powerful cohort for any corporate to invest in and target. The second is, as I mentioned, about infrastructure and PLI scheme. So a broader geopolitics diversification strategy. The government has come out with this production-linked incentive scheme. We are seeing early benefits in electronic manufacturing. We are seeing benefits in textile manufacturing. We are seeing benefits in pharmaceutical manufacturing. So, where next? Would this be successful? There has been some failures here in some few sectors. So, that's been a challenging part. So we try and navigate through as to, where there's a new policy now for semiconductor as well. The government and the private entity is combined spending about $19-20 billion. One question is, will this really happen? So these are the few factors that we are closely monitoring.
Gurmeet, a lot of the factors Saniel mentioned also rely on the geopolitics. Certainly very interesting times in terms of the geopolitical story. Diversification is the big theme. India has historically been seen as this aeroplane sitting on the runway. Especially foreign investors, we hear of a cycle, right? Every 10, 15 years, India is the next aeroplane to take off. But the ATC just tells us, hey, hold on, let some other aeroplane go by. Why now? The question to you is why now? Why is this time different?
Yeah. So two things. One, I think we are non-aligned. We are not part of any, we get along well with both Russia and Ukraine, for example. We get along well with China too. So this one, we are non-aligned. Second, we have never been the aggressor. We have no territorial. So what we are seeing now is that, so there were two events which I say have been part defining. One is the fall of Berlin Wall in 1989, where globalization started. Second is 5th November 2024, when Mr. Trump got elected. So I think the reverse of that will now see. You'll see a lot of regional deals, FTAs. So it's a reverse of what has happened in globalization. And there are few areas India stands out. One is defense, for example. So we have light tested. We don't need simulators to test our defense capabilities. India, for example, our air defense system used AI which based on our satellite systems to dispel any drone attack. So this is the most advanced form of defense system anybody would have seen live tested a few weeks back. Some of our hypersonic missiles are Mach 5, which is 5 times the speed of sound. Now, I would not have imagined India making Mach 5 hypersonic missiles about 10 years back. We were net importer of defense. We are already talking of defense exports worth few $1 billion. This year we've done $4 billion of defense exports. So that I think that runway is on the takeoff. EU has been asked by NATO chief to do 5% of GDP spend on defense. Now that number is $1 trillion, right? India would increase defense expenditure. I think we'll be a big beneficiary there. The second beneficiary, India, where I see the plane on the runway, is this lower segment. We have 500 million people in India who have never been to a mall. As per a World Bank report, about 170 million people got lifted out of poverty. These guys need gadgets. This is an aspirational India. They want to own a two-wheeler. They want to own a smartphone. They want to ride a good car. They want to own a house. And that is the reason whenever anything geopolitical happens, we are cushioned off because we have a huge domestic demand to be met. I think that story is also on the runway as per capita picks up, should take off. The third one, where we have already taken off, as Salil has said, I think is defense, pharma. Whenever anybody gets time, just read the Biosecure Act, which US wants to, pass in the House. The Biosecure Act talks about US being very fearful of, gene mapping, gene theft on some Chinese companies, right? So, and there are drugs worth billions of dollars which are going off patent. The new war in future could be biowarfare. And that is where India fits in. We are very trusted. We would not stab anyone. We would not be the aggressor. And I think with this geopolitical equations changing, India would more often be seen as a trusted partner. Second, we are very frugal in our engineering. We'll always offer, we can send a mission to Mars at 1/10 the cost, which NASA does. So frugal engineering, human capital, and being trustworthy, I think are the opportunities.
Well,
Janet, just to add on two parts of why now, with this whole shift in manufacturing as +1 strategy, India came out with a policy of lowest tax rate. So for a new manufacturing facility, 17.5% tax rate for 10 years. It's lowest within the Asia region. That's kind of an incentive to corporate to come in line with what Singapore tax rate is. The second is the labor cost. So India's labor cost today is what was China's labor cost in 2000. That's 25 years back. So these are the two factors that drives corporates invest, build manufacturing capability, and that's where I think.
Well, to your point about space, we hopefully, fingers crossed, India will send an astronaut to space after 40 years. That's tomorrow. The launch is scheduled tomorrow. But Saniel, to your point about manufacturing, let's spend some time on services. The final couple of minutes on services as well. Historically, India has always been, while China has focused on manufacturing, India has focused on services. So, Gurmeet spoke about the GCCs. All of the large Wall Street banks, their largest offices outside of New York, of course, are in India, including, so Sumit will probably put more money into India as well, hopefully, very soon. Where do you see the services story, and where are pockets of opportunities in services?
Okay, so you mentioned about GCC. Let me just add that. So GCC is Global Capability Center. There were 1,000 centers in 2019. Today it's 1,700. So within a span of 4 or 5 years, 70% increase. They employ about 2 million people. To me, the language, relevance, which is English, education system, younger population, these are the 2-3 factors that has led to this growth, and we still see this growth. Our interaction with a couple of these, the residential REIT providers, the commercial, they are seeing very good demand from all these global GCCs to coming into India. And I think broadly the alignment on a geopolitics side kind of also aids to that.
Absolutely, office spaces at a premium,
yes.
premium in India. Ask me as somebody looking to get a new office space. Yeah. Final thoughts about India. When is the right time to enter?
I think the best time was about 20 years back. The second best time is now. And also, I think, look at our index. We follow US with a 10-15 year lag. So look at the top companies in US today. They're all digital companies. Tesla is an auto company, it's a digital company. Amazon, Microsoft, Netflix. Netflix has a market cap more than Reliance, which is our largest holding. I think we are yet to see our own Amazon. We are yet to see our own Netflix. We are yet to see our own Tesla. And I think as we grow along, a lot of companies will enter. Our largest company is just $300 billion market cap. Right? So I think digital space, in my view, you will see more opportunities. I think one of our defense companies would be in top 10, 20. That's my view. So you have to take a bit of a leap of faith here and see what are the emerging trends there. And right now, our financial sector is 35% of the market. I mean, that's not going to sustain. Other sectors, services, as you rightly said, other sectors will make way. And if you get this trend right, manufacturing, defense, financialization of savings, I think there's plenty of wealth to be made.
And Saniel, are you convincing your investors to take the leap of faith in India?
Indeed. So, last 10 years have been exciting, but we are actually even more excited now than before. So, indeed, we are positive. We are seeing a very good response from, our interactions with our potential investors as well.